Mark Lackey comes in as Executive Vice President of CHF Capital Markets, and he's talking about iron ore today. Iron ore is what, at $98.95?
$98.95, Pat, and interestingly enough, it goes under 100 by a buck, and now we got people coming out of the woodwork, or maybe the blast furnaces, and are suggesting that it's going to go to 75 within the next month and stay there. You know, the reason I don't think that's a very likely scenario, although I'll say any scenario is possible, is that if you look at demand, where is the biggest steel demand in the world these days? It tends to be in non-residential construction, i.e. infrastructure. And we're seeing infrastructure programs that have been announced in 4 countries, China, India, Indonesia, and Brazil, that are all kicking in the latter part of this year. So on balance, we're going to get more steel from there. And the other big area, of course, is autos, and the auto sector is still doing quite well. When I look around the world, Pat, I see some weakness in things like consumer semis and consumer non-durables, which, yeah, that can affect your economy, but it doesn't use a whole lot of steel. So again, I think you have to consider that steel and iron ore, where the markets are, the demand to me is still relatively strong. There's been a little bit of additional supply coming out of Brazil and Australia, but I don't think that's enough to really warrant a $75 price. So,
okay, but the knock is that, you know, the Chinese economy is not growing as fast as it was. Automotives are not likely to grow as fast as they have been in the past. And the cost, the input costs for iron ore, I'm thinking electricity in particular, have gone up.
Has been some increases, and you bring up the electricity, which is an interesting one, because in Japan, they're cutting back on some steel and auto production because they haven't restarted the nuclear plants.
Yeah.
Now, I keep thinking they're going to restart them this year. I guess we will all see, but that would help iron ore and steel if that happened. But the other point, though, let's flip it around here, Pat. There's a fair number of iron producers in China who break even at 95. So how long are they going to produce at a loss? I mean, they're going to take that iron ore out of the market. So I think if you go down to 75, there's a self-correcting phenomena, in my view. So, you know, I'm calling 115 at the end of the year, and some people might think that's a little bit too positive, but I perceive that I still see growth in demand, Pat, as you're suggesting, maybe not as fast as it was, but like I'm not looking at the second derivative. I'm looking at the actual rate of change, and it's still positive.
Yeah, yeah, good point, well made. But by the same token, I mean, the Chinese are still putting up empty cities.
Well, they are to some degree, but the other factor, though, that I'm looking at, and we talked about it before, in the electrical grid and some of the bridges and port facilities, they really do need. I mean, if there's a country that needs to expand its port facilities, it's Australia. They really have to start spending some infrastructure money, which they're not doing. And that's another reason why I think there's a limit as to how much iron ore can come out of Australia. You're pretty much close to the peak now at the ports, given where the iron ore is found in Australia.
Yeah, no, interesting. Okay, so against that background, you're positive, and you said what, 115?
Yeah, 115 at the end of this year, and I'm saying 125 by the end of next year. I kind of think the long-term price is in the 120 to 125 range, which I might add is in line with some of the people I know in China. They tend to agree with that analysis.
Okay,
since
so
they are the biggest users. That's what they budget.
Let's use some names. Century Iron Mines Corporation.
Right. Century's one we put on, Pat, as early as about 9 months ago at around 32, 33 cents. We're now sitting 55, 60. So you've had a nice little gain. But I think this company was started by Sandy Chin. He was one of the key guys at Consolidated Thompson, which, as we all know, was one of the big iron ore takeovers in Canada. He brought basically a lot of his people with him. They acquired some excellent property in the Labrador Trough. And, of course, the Chinese are big players behind this particular company. Minmetals and Wisco have significant money in this company. So I see this company as the one that's going to grow and continue to grow, and they've got production as early as next year in 2015. Okay,
but this is pre-production, and you still like this kind of thing?
Yeah, I do, because they're close to production. This is not greenfields anymore. They will be producing in 2015. Production will ramp up even more in the next couple of years. And given the Chinese money's in there, the project and the company is de-risked. I mean, I think this is going to be the big emerging company out of the trough at some point.
Wow, okay. Fairmont Resources, Inc.
Well, here's an interesting play. You know, this one was brought to me by Michael Dean and his capital advisor, Greg Minion. They came to me recently and said, you're an iron ore guy, take a look at this project. And I really hadn't looked at it too closely, Pat, because I don't know every story out there, to be honest with you. And they were close to the St. Lawrence River, and they're actually going to be shipping DSO, direct shipping ore, this year. So this is actually a company that's already going to be producing by the end of the year, and yet it seems to be off most people's radar screens.
Why?
Well, you know, I think management's concentrated on building the company and maybe not marketing as much as they could. So, hey, I'm going to mention it on TV, so at least people will start to recognize that this company exists. And, you know, and I think over time they plan to do more, but I think in one sense they decided, let's get this project up and running, and then we'll start going around to the street. And I mean, they did contact somebody like myself, so I give them credit for at least reaching out to people.
What do we know about the management? Isn't that the important component?
Yeah, and I think the management, they've got some people that have good iron ore experience. They know the Quebec market very well. That's all their background. So again, I like the management team, and I think that this is just a case of a company. Look, there's probably a number of pretty interesting hidden jewels out there I don't know about, but this is now one that I'm aware of, and I think people should have it on their radar screen because, as I said,
yeah, low energy cost inputs and
absolutely, and they're $5
jurisdiction.
transportation costs, $5 a ton. That's all because they're close to the St. Lawrence, and of course, very cheap electricity in Quebec.
And then Lamely. Okay, iron ore.
When I said to some people I was going to do iron ore, a number of people said, pick one greenfield play. I said, I'm not that big a fan of guys who don't have near-term production. But when I looked at it, Lamely had Pierre Lortie, who one of the best-known guys in Quebec, Provigo, Bombardier, ran the Quebec-Montreal Stock Exchange. I mean, he's one of the stars in Quebec. And he's put together this all-star team of directors, and then he's gone out and acquired a couple of guys from Century Mining that also were Consolidated, Thompson, and he went and got the project in the southern part of the trough. I think that's got terrific potential. And it's
what trough?
Labrador Trough.
Labrador Trough.
Okay. So he's in the southern part of the Labrador Trough, which means from a transportation viewpoint, he's hundreds of miles closer to Baie-Comeau and Sept-Îles than the guys up in the northern part of the trough. So I think that if you're going to pick a greenfields project, this is the one I really like because great management team, good jurisdiction. I think there's a lot of potential for these guys to actually potentially find a mine down the road.
Okay, but do we know if they've got any drills in the ground? They've actually found iron ore?
But they've got, Pat, there are been some drill holes in the area and around their project in the past, so there is definitely iron ore there. The question is not, is there good grade iron ore? Yes. How big it is? Well, we don't know yet. But I think with the team they've got, I feel it's at least worthwhile putting your eye on this one if you want a greenfields project.
Yeah, because Lortie's not a prospector. It's not like he's out there chipping at the ground.
He's as we know, a pretty well-known businessman.
Yeah.
But when I look at the people he's acquired, all the iron ore expertise, and the directors are big Quebec guys who know how to raise money. So I think that when I look at this team, it's a pretty strong team.
Okay. Mark, great to have you on.
Good to be here, Pat.
Mark Lackey, Executive Vice President, CHF Capital Markets. Quick break. When we come back, we're going to talk about Canada, maybe